Hey, what's going on, everybody? Thank you so much for joining me today for another episode of Breaking Bitcoin Market Update. Of course, I'm Justin Wise, lead analyst, senior mentor at Cracking Cryptocurrency. Hope you guys are having a fantastic day. Of course, it is Thursday, January the 31st, the last day of January, guys. We're almost there. By this time, I'm sure that New Year's resolutions have been completely broken. You know, that New Year's resolution you made to yourself that you would never, ever go more than 25x leverage on BitMEX. Yes, I'm sure you've probably broken that by now several times. And that's why we need to be staying in this channel, guys. Hopefully we're getting there, man. Hopefully we're getting better. All right, so interesting day today. Got some interesting news to talk about. Got some interesting things going on in the charts. Low volatility day for the big coins. Altcoins mostly dumping. That's mostly because Bitcoin dominance is on the rise. When Bitcoin dominance rises like this, we do see significant drops in altcoins. So, although there are always going to be opportunities and potentialities out there, there are a couple key coins that I am playing right now, just based on volatility. Of course, we do see many of them oversold. However, unfortunately, we're kind of seeing them just go a little bit more oversold. You know what I'm saying? So feel free to post what you want. We'll take a look at some requests, guys, if we get some time for it, as we normally do. I just want to give a big shout out to the chat. We got, hey, Wally, how we doing today, man? Jasper, Kuwait, Jurgen, Podnuts, Kyle, Turd, Ferguson. Love that name. Johan. Yeah, absolutely, Kyle. In fact, that's kind of the key thing that I want to look at and talk about today. Is yes, that I am feeling pretty bullish on Bitcoin. And it's hard not to when you look at some of the fundamental metrics that we'll be looking at. Of course, this is going to be for positional trading. So make sure that for any intraday trading, any type of setup like that, that you are following your own trade strategy and metrics as we talk about throughout the show. All right, let's get into it. Let's go over to the charts. We'll do that first, and then we'll get into some news. All right, so here we are looking at the Bitcoin daily chart. Okay, so not a whole lot happening. We're just kind of stuck right around that consolidation range, around that support level, around that 33.90 level. All right, now, as for the group, so we did take a stab on a long. However, last night, right before I went to bed, I didn't really like it. We went long on ETH and USD, and the trigger for that was the exponential rise of XRP. Didn't get in on that trade because by the time it was pumping, we were already not in position. So I never chase something. I never chase a parabolic movement. Although in retrospect, yes, was it possible that I could have gotten, a few percentages out of it? Yes, absolutely, it is possible. But I don't chase parabolic movements. Why? Because entering into high volatility is an excellent situation where you can get yourself wrecked. Now, there are times where I will enter into high volatility, but more often than not, I prefer positional trading. I prefer identifying what are the key horizontal levels where I should be interested in putting on trades, and then watching the manner in which price approaches those trades and adjusting my strategy intraday as I see the markets develop. Before we actually get into the price analysis, I want to look at the metrics with you guys because those are really important. Everybody, technical analysis works. It simply does. Technical analysis does work. Anybody who says that technical analysis doesn't work has been wrecked on BitMEX once or twice. But technical analysis can be subjective. Technical analysis is not a crystal ball, but technical analysis is a legitimate, fundamental, actionable way to analyze price history and make predictions about what is likely to happen in the future. It's about pattern recognition. It's about understanding movements. It's about understanding statistical probability. And more important than that, it's identifying and exploiting the psychology of other people when it is applied appropriately. That is what we're doing, ladies and gentlemen. We are identifying areas in the market where other market participants are likely to do something. And then we are attempting to take that information and capitalize on it to our favor. So one very good example of this is institutional order flow. We know, for example, that there is lots of liquidity and the market needs liquidity to move. Let's understand that. The market needs volume. It needs urgency of buyers, okay, or sellers if it's selling volume. The market needs urgency of selling or buying volume, and the market needs liquidity, the capital of that urgency, to propel itself volatilely with high momentum, to move strongly in one direction or the other. Those are our requirements. If there's not a lot of liquidity and if there's not a lot of volume, so if there's not a lot of capital and the buyers or sellers are not urgent in their trading decisions, then there's not going to be a lot of volatility. And as a trader, you need volatility to be profitable. Anybody who has scalped a 10% a day asset will tell you volatility is nice. Anybody who's tried to scalp pretty much Bitcoin in these ranges right here has had a couple of bad weeks. It's had a couple of bad weeks, guys. There have been some decent trades. Honestly, just in retrospect, the best trade is still the positional short from the resistance zone. Still the positional short from the resistance zone. That has been your greatest bet. Anybody trying to enter on hourly time frames or shorter intraday time frames, it has not been working out for you well for you, and I know it hasn't. And that's not to say that you can't be making profit in this market, that there aren't trades to be taken on the 5-minute chart, on the 30-minute chart. They're there, they exist, okay? But when you're looking for the larger opportunities, you are looking for your positional directional trades, or at least the intraday trading on high volatility, which we just really haven't seen, at least in Bitcoin. That has been in the altcoin markets for the last couple of weeks, and that's where we've been at. All right, so as we pointed out earlier on the chart, and we can see here. Oh no, I said I was going to go over the data metrics first. So let's go to the data metrics, and you'll see. Hopefully, I can explain to you my fundamental reasonings behind Bitcoin. So here we are at vchealth.io. And vchealth.io is measuring lots of fundamental metrics for Bitcoin in particular. This is just Bitcoin. So we can see arbitration opportunities, MTI, AA, volume, liquidity, market cap, et cetera, et cetera, et cetera. But what we're looking at here is market depth, historical market depth. And historical market depth, for those of you who are unaware or new to the channel, historical market depth is measuring the amount of bids and asks, all right, or bids and offers across all exchanges. So the way that this works is when we see that bids are higher than asks, when bids are in greater proportion to offers, then we do expect the market to go up. Why? Because there's more buyers in the market. Now, we need volume and liquidity for that to happen. We need urgency of buying, and we need liquidity to the buyers for that to occur. So we have for a bullish bias, so we have to determine a bullish bias, and then we have to determine timing. Okay, so we have to understand, we have to determine, okay, which way do we think the market's going to move, and how do we determine which way we think the market's going to move? Well, if there are more buyers than sellers, the market's going to move up. If there's more sellers than buyers, the market's going to move down. So what do we see here? Historical market depth, or the market depth ratio of Bitcoin would, excuse me, and this isn't the market depth ratio, this is just the market depth. The market depth would seem to imply to me that there are more buyers and sellers. Now, keep in mind that this is the entire order book, right? So that is one thing we need to understand. This is not going to tell us where the volume and liquidity is. It's not going to help with our timing. It is going to help with our bias. It's going to help with our directional bias. So looking at this, we have to assume that our directional bias should be bullish. We have to assume that overall, in the midterm here, as long as this remains constant, all things being equal, the price is more likely to go up. Now we have to determine timing. We're going to need technical analysis and psychological understanding of where volume and liquidity are. So we'll get into that in a second. First, we want to establish, I'm going to lay the case out for you for the bullish scenario. Okay. As we can see, market cap slowly in decline. The total market cap for Bitcoin as it sits today, I do believe this is going to be accurate on my chart, $59,967,728,361. All right. Not a small chunk of change, but not a very large chunk of change compared to many stocks. Pardon me. Current, $60 billion, $11. It says it right there. Ha! Come on, Justin. You're supposed to be the professional. All right. So all we're really worried about on this page is historical market depth. All right. Let's go over to vcdepth.io, and we'll take a look at Bitcoin. But before we do that, well, first we'll look at Bitcoin, and then we'll zoom back. Hey, Wally. No, I was reading the news, because I kind of got sucked into a rabbit hole reading some interesting stuff about the BitTorrent token sale. And then I looked at the clock and I was like, oh crap, it's 2 o'clock. I hadn't set the show up. So when you select a show to do a live stream of the events, they only give you options of 30 minutes. So I had to say 30 minutes. Sorry if you missed it. Oh, man. Oh, okay. So Kyle, I misread that. You said XRP. I will get into ZERP. Yeah, man. CBN5. Hey, good to see you too. Cool to catch a nice pump while we live. That'd be awesome, dude. My day is good, man. Thanks, Zoom Zoom. I hear a lot of people say that the banksters are fraud. I agree with that, but I think altcoins are the same, if not worse. Yeah. Just put me in fast forward mode. All right. Okay, let's see here. So let's take a look at the market depth ratio. Okay, so here's that same market depth, all right, the same thing that we were measuring, a little zoomed in. And here's the market depth ratio. So this is actually the ratio of bids to asks. And we do see that this is quite high. Now, this is not the same as longs to shorts ratios. Longs to shorts ratios, when we do see that longs are in an unsustainable situation to shorts, because remember, longs to shorts ratios, that's speculation on the future of the market, whereas this is representing actual buying and selling underlying assets. So if there's more buying than selling in an underlying asset, if there's more demand than supply, then price will go up. If there's more supply than demand, if there's more selling than buying, price will go down. And I know that sounds very basic. And why, Justin, why would you say that to us? That's obvious. We know that. Because I don't think that most people understand, like they don't keep that in their mind. They don't keep that in their mind. They think, especially novices to technical analysis, I think many people start off in their understanding of technical analysis or their approach to the charts, in my view, my humble opinion, in the wrong direction. They think that, the market is oversold, therefore it must go up. No, the market is oversold, so therefore you have a condition, you have a bullish bias that price might go up, but that doesn't necessarily help with your timing. Again, you need volume and liquidity for price to make a significant move in your favor. So, determine directional bias and then establish timing by determining what are the levels where there will be volume and liquidity to, and now English has failed me. There will be volume and liquidity to satisfy a high momentum movement in your direction, in your favor, ideally. So we do see the MDR quite bullish overall. And this really did flip significantly, I mean, almost 5 days ago. And this has just continued to progress and continued to progress as price has moved sideways and slightly down. Interesting. Keep that in mind as we continue through this analysis. Now, let's go back here to the main page of vcdef.io. And what we can actually do is click this button and we can see the nearest 5%. The nearest 5% to the current price of the market depth ratio. So not just measuring the entire order book, okay, and obviously we were looking at the market depth. When we're looking at that, keep in mind that we are looking at the entire order book, the entire offer side and the entire buy side. So that does help with general directional bias. But we want more specific information. We want more short-term information. We want to know within 5% of price, are we bullish or are we bearish? So does that mean we can expect a 5 to 10% movement up, or does that mean we can expect a 5 to 10% movement down? So we do see that within 5% of price, we do see that the MDR is still to the positive 17.03%, and it's had a drastic jump up of almost 16.65% in the last 24 hours. So still very bullish, still bids continuing to pile on into the buy side for BTC, and this is spot. This is spot price, non-futures position. Okay. Market depth ratio, okay, to the bid-ask sum, which is going to be the same thing, but a little bit more specific. And again, this is not going to pool from all exchanges. So when we're using this, we do want to wait at least 3 exchanges. So we'll start off by looking at Bitfinex. Let me take a brief pause to thank Vinette Pangal. Thank you so much for the sub on YouTube, my friend. Welcome to the community. And again, I want to thank, for the last few days, I think I might have missed you guys, but I do want to thank you, DLXX, John Unu, Picasso 787, and Jorg Korn. Hey, thanks so much for the follows on Twitch, guys. Highly appreciate it. All right, this is the bid-ask sum within 5% of the range of price. All right, so we're going to be measuring here initially from Bitfinex. All right, we're going to be measuring from Bitfinex, and what do we see within 5% of price? Quite a bullish order book. Quite a bullish order book. If we go to Coinbase, we'll look at Coinbase. The exact same thing. Now, MEX divergent from this, as we've been talking about. So if you actually go back and look, you can see that on the futures platform, you could see where the bearish bias was more. Individuals were speculating more on the price moving down. And I want to take a counterintuitive approach. I want to take a counterintuitive approach to that. In saying that I think the futures markets are wrong in this regard. I think the futures markets are wrong in this regard because what we see is that the future outlook of XBT or BTC was bearish from the standpoint of the majority of traders on the futures platform. And when we see that index price, when we see that spot price does not confirm their underlying bias, I have to assume that they're wrong. I have to assume that they are wrong. That shorts are piling in, retail shorts are piling in my opinion, the worst area to be going short. And that they are going to be, and that the majority of retail traders are going to get hosed because of that. I think that a lot of people are putting on shorts in this range when you have no reason to be putting on a short in this range this close to the bottom of the trading range. You are supposed to be shorting from the top of the trading range near resistance. You are supposed to be longing near the bottom of the trading range near support. If you are late to the party, you're late to the party unless you have a trading strategy that allows you to understand to trade on intraday range trading. It's fine. But when you're looking at positional bias, directional bias, I do think that this is not the time to be putting on shorts. We're too close to the bottom of the trading range. The margins are too tight. The whipsaw is too real. And what are you going to do? Are you going to target 3,200 with price trading around 3,400 right now? Where are you going to set your stop? 3,500? It's a 2-to-1 risk to reward ratio. You don't think we can get you don't think we can get a wick up to 3,500? So, okay, are you going to set your stop to 3,600? You're going to take a 1-to-1 risk to reward ratio for a positional trade? Doesn't make sense to me. Doesn't make sense. Where do you set your stop if you're going short? Right above the swing high? Not going to work out for you. Not going to work out for you. It might. I mean, it might. I can't tell you that it won't. Okay. but I can tell you that it's not a trade I would put on, just based on where we are in the range. No man's land, go find something that's in a clearly defined range. Okay. Right, so that's my opinion on the futures platform there. Now let's go over to CoinFarm. I don't think we're going to get specific data that's going to be actionable or helpful. Yes, we do see that within the last 24 hours, the dominance is to the shorts on BitMEX. This is measuring BitMEX, 52.10% to 47.90% to the longs. Now, if this is what I would love to see. This is perfect scenario for my long setup. And we'll get into this when we get into the charts here in just a moment. We'll get there. As price falls down to support, the retail short traders on BitMEX continue to get overly aggressive, especially as we approach the swing low. Price will intraday wick down below the swing low, tap into liquidity, trigger many stop sell orders, trigger many long stop losses, and fill up institutional order flow, fill up savvy traders, long positions, and then price will move up. Because there we have the volume and liquidity to make a move, supporting our directional bias, which is bullish based on the metrics that we have just looked at. Now, is this 100%? Nope. Otherwise, I would be a millionaire and not a 100,000aire. But there you go. All right, so... And within the last 30 minutes, we do get a 5.469 nice candle. So let's go look. That's significant buying. That is significant buying. Interesting. All right, let's pull up. Sorry, I got to pull up my Streamlabs so I can switch back. Okay, great. All right, so here's my ideal scenario. Now let's pull open the volume profile so we can understand how these areas have been established. Looking at the volume profile on the daily chart for Bitcoin. Again, you're going to have to extrapolate this slightly for BitMEX or Bitfinex or whatever chart that you're trading on. We do see that we have our next high volume node, and that is coming in at 32.39. Oh, let me make sure I'm measuring that correctly. Yeah, 32.39. For some reason, I have a line at 32.40, and I don't understand why. Maybe if I just delete one. Ah, that's why. There we go, 32.39. I must have drawn these in multiple times, that's why. There we go. There we go. All is well again. So we have 32.39, which is slight daily resistance right here. And really, you know, obviously where we broke up for the bullish impetus on the last rally. So we do have a high volume node right there. Key area of support. There will be a lot of liquidity in that area. And where will there be significant liquidity? There will be significant liquidity in this zone right here, right below the swing low. Right below the swing low. So one thing, as we descend down to this level, ATR will help you determine where to set your stop. ATR will help you determine where to set your stop. Currently, ATR on the daily is $147.67. So what I've done is I've measured ATR 1x below the swing low. And actually, I need to adjust that because now volatility has increased slightly. So we do have the low at 31.2228. Pardon me while I pull up my calculator. 31.2228 minus 1x ATR on the daily, 147.67. Oh, whoops. Wrong window. Sorry, guys. 147.67. 29.74.61. All right. Since that's above where I currently have it, I'm going to go ahead and leave it there, meaning volatility has actually decreased. So I'm going to go ahead and leave it there for the time being. All right, now I am not guaranteeing you, there we go, that my stop loss will not get hit. And that is why, ladies and gentlemen, it is not a hard stop. It is a mental stop. Should we close a daily candle or really even a 4-hour candle, it really depends on the nature of the volatility at that moment in time, but it's going to be crazy, guys. It's going to be a crazy moment. If the scenario plays out, Unless we get a significant close below that level, I will be in my position. I'll be locked and loaded and ready to go. Okay. Thanks, guys. Ooh, my daughter is so mad at me right now. Hey, thank you. 7Y34G5734A G5G8745. Blah, 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 blah. Sorry about the signal interruption, my friend. Military makes obstacles. Hey, man, we're here for you, brother. Hey, Sakib, what's going on, my friend? Lord Darth Star, Bitcoin, where are you going? Bitcoin is bipolar today, but we'll have the monthly close in a couple hours. Going to be interesting. Yes, looking forward to it. What action can I take against USI Tech? Or can anyone... You got to block him, man. You got to block him. Thanks, mate. I appreciate that, brother. Not a millionaire unsubscribed. You guys are crazy, dude. Oh, man. I appreciate you guys. Thanks so much for the support. Hey, what's going on, Andrew? Hey, Cola, what's going on? Glad you guys could join me. All right, so that's my setup. That's my scenario for BTC USD. Not going to be. Yeah. Well, let's cancel that. Let's go over to XBT. Let's go over to XBT and let's get rid of a few things here real quick. Just make the chart a little cleaner to see. There we go. And we'll go to the daily and we'll be able to see that setup. That's a big line. Sorry, I've been doing a lot of playing around, guys. I'm still experimenting with the new three customized strategies of mine that I'm hoping to make available to my subscribers here within the next couple of months. Currently stress testing them on exchanges, experimenting with the automation. Everything looks really promising, though, so I'm very happy about the progress that I've been able to make on those. And I will tell you that it has not been easy. So I'll go ahead and delete those lines. Those were intraday lines. Okay, so quite a similar situation here from BMAX. Obviously, we do have that level here at 32.25 and then 31.21. And then we'll need to take the same data metric, the 1x ATR, below the swing low would be where I would set my mental stop loss. Okay, one thing, and I do want to give credit where credit is due, one interesting chart pattern that I've seen is the potential falling wedge. So we'll see if I can draw it as well as my counterpart. Well, nope, already screwed up. Again, I am not a chart pattern trader, so bear with me as we attempt to do this. So actually, I connect that line. I'm going to connect that line, and I believe you guys saw from the chart what we're seeing here. So this would be essentially this measurement there, potentially. Okay, a lot of different ways to draw this. I prefer the way that this looks because this does, and again, this is why I don't trade chart patterns because they're subjective. But this is from a trader that I do respect, and if I'm bungling his particular interpretation of the falling wedge, I apologize. But falling wedges are my least favorite. I will say this. Wedges of all shapes and sizes are my least favorite chart pattern to give weight to because they don't actualize to the upside very well. Well, how do I say this? They're very random in how they actualize. Very, very clearly established descending and ascending triangles, flags, pennants, head and shoulders, inverted head and shoulders. Those do tend to at least have a greater potential to actualize. I have read many studies that say that there is no validity to chart patterns whatsoever, that say that they are completely subjective interpretations and they actualize as often as they break down or move in the unintended or move in the converse of what is expected. So I do have to put a little bit of weight behind those. Those studies were pretty significant. I think if you Google, or excuse me, if you YouTube search chart patterns or BS or something like that, you'll see a couple interesting YouTube videos. So those are interesting. And again, I've never, again, I studied chart patterns. I read Bulkowski's Encyclopedia of Chart Patterns. I traded them for years back in traditional markets, but I just realized that they didn't give me the hit ratio the hit rate that I liked. And I realized very early on that I was looking at what everybody else was looking at. And that made me less of an efficient trader. So if we do see this falling wedge, we do actually see the absolute apex of this falling wedge at my initial support level there at 32.25. You can see it just touches down there perfectly. And what we could potentially see is an intraday wick down below 31.21. If I were to weigh in on this and give you my personal opinion of how this particular thing might play out, I mean, if we actually drew it a little bit more honestly, we get less of an extreme apex. That's why if we do measure from back here or back here potentially, we get more of a pronounced apex down here. So again, not the way I trade, but I do just want to point that out because I do hear people talking about that. So my take on this is that we do end up seeing higher volatility down here. At least that's what I would love to see. I would love if Bitcoin can drop down here below 31.21. I will be very, very pleased. I will be very, very pleased. And I will be very, very happy to melt the faces off everybody trying to short that. Now, could I be completely wrong? Are we going to come back here in a few weeks or a month potentially? And everybody's going to be like, Justin, you suck. You're the worst technical analyst ever. That's fine, guys. If you like the channel, if the trades, again, I don't recommend trades generally live on the channel. I might give suggestions or ways that I would take them. But everybody's responsible for their own trading decisions. And as long as I remain a profitable trader, I'll feel comfortable with my analysis and the way that I approach things and the way that I look at charts. And when I'm not profitable, well, then I'll go work at Starbucks. I really, really, really like coffee. Okay, there's not much else for me to say technically. I mean, that's the scenario. I mean, that's my scenario, guys. That's my scenario. The other scenario, again, as we've talked about at length, let me pull up I'll just go look at it on spot price because I already have it clearly delineated there. Let's go look at it on spot price. The only other scenario in my mind would be to, if we can get it back above, no, I really don't look for a long. I can't look for a long, until potentially 36.20 or until one of my strategies tells me to go long. And my strategies, it's very difficult to look at the bar chart, the candlestick chart, and determine what my indicator will say because I've programmed it to understand momentum, to understand key turning points in the market. So it's not, obviously it's price action that's based off of, but not necessarily open, high, low, close data. So it's difficult to look at a candlestick chart and tell you exactly when my indicator will tell me to go long or to go short. But that's based on its own metrics. So, yeah, I can't look for a long just based off candlestick price action. Until we get above 36.20, I really can't see that for looking for a positional trade. And even then, I feel kind of iffy about it. I think that if we don't go down here, first before coming back up, I will be looking for shorting opportunities. I don't think this is enough. I don't think there's not enough liquidity here. There's not enough volume for us to actually break resistance or get to resistance, in my opinion. So if we are unable to come down here before we go in this range right here between 36.20 and 3800, I'll be looking for a short. I'll be looking for a positional short at that point in time to take the market back down. Now, if we can get if we close the daily above this descending trend line, and really we do have confluence here with the point of control and the trend line right here. That's coming in right around that 38.20. So if we close the daily above here even potentially, then I don't long resistance. But I will be not entering into a position until I get confirmation of a breakdown from the resistance zone. Again, the resistance zone formed by the weekly equilibrium block. All right. For those of you new to the channel, the equilibrium block, of course, is when we have a we have a strong directional trend, and then we put in a brief pause on higher time frames in the opposite direction. You can see we just stall out here in the market. We put in a Darth Maul doji candle. The market continues descending, finds a bottom shortly thereafter. And then price immediately reverses and tests this region of weakness. Why? Because at this level in the market, the bulls sensed weakness in the bears. The bears had full control, just running train on the bullish agenda. And then we see the bulls show a sign of strength. a sign of weakness in the bearish trend. And then the bears step back in, push back down, get their way. And then we come back up to retest that resistance after we bottom. So this is the key zone to be keeping your eyes on. If we can get a daily close above this level, that level on the weekly is going to be 41.02. It does obviously extend to the upside and to the downside. And if we go look at the 24-hour chart, we can find confluence with that. You can be a little bit more, and this is the this right here is what we're talking about. This is the this is the order block right here on the weekly time frame that you can see. 7 days of overall bullish momentum with stall out once we do reach resistance right here. So if we get the daily close above that level, and the area that I'm going to keep my eye on as well is this fulcrum formed by the horizontal resistance of the weekly close of that equilibrium block and the descending trend line. If we can get into this fulcrum, I will probably be putting on a potential long, but really it will be not a full position size. It will likely be 30 to 25% of a position size until we get that daily close above resistance. And then of course you can aggressively enter with your full position size at that time or wait for the pullback to retest resistance. The danger of waiting for the pullback is that you might miss the movement if it does end up just going parabolic. The benefit to that is that you will have confirmed support and are much less likely to get faded because breakouts do get faded 7 out of 10 times, 30% success rate for breakouts, 70% fake out rate. That's why if you want a profitable strategy, fade breakouts generally. But another aspect to consider is that the more times that we test resistance, the weaker it becomes. Just if we go back to Bitcoin, if we look at the year of 2018, the more times you test support, the weaker it gets. And there's absolutely nothing bullish about this year. I would really like just to take this. I'd like to take a moment of silence, guys. I just want to take a moment of silence for everybody that longed at support. You know, let's not forget our fallen brothers and sisters, okay, who listened to Peter Brandt and said compound fulcrum. Just a moment of silence for our fallen brothers and sisters who said the bottom's in. Correct. All right, moving on. Let's go check out Ethereum. Ethereum is going to follow Big Brother Bitcoin wherever it decides to go. Let's go look at the 24-hour chart. And let's get volume off of there. That's being distracting. Okay, so daily chart for Ethereum, and similarly with Bitcoin, hopefully, sorry, I didn't point that out, but let us point that out so that we can have the traditional classical traders understanding where the EMAs are sitting, because the EMAs are important. We do have, again, we're being completely governed by the 8 exponential moving average on the daily. Very hard to get excited even about a scalp trade until we can get an intraday trade above that level. As you can see here on the intraday trade, this was the last, I believe the last long we took, yes, was, oh, come on now. What are you doing, you silly thing? Yeah, so right here, we do have intraday volatility where we do get an intraday trade above the 8 exponential. And once that happens, you do have the opportunity for a scalp long. But just remember, until you get a closing basis, you're not doing positional trading. You're doing trailing stops almost immediately from entry. All right, so back to Ethereum. But yes, my point here is completely governed by the 8 exponential moving average on the daily. So very, very difficult to get excited about anything until that at least changes. Now, we talked about this obviously previously. We were coming into this level of support right here on Ethereum, marked by the high volume node right here and the little baby high volume node right there. Below us, we do have that shallow area of the low volume node. We actually do see a stop loss hunt into that area, tentatively peeking its head down there. For a brief rally right here, again, we did go long on Ethereum and we're recently closed out in profit, entered at 105 in the 105 region. So 105.25 for me, if I'm recalling accurately. Let me make sure. I'll pull this up so I'm 100% certain. What was my average entry on the Ethereum long? Yes, average entry 105.35. Okay, and stopped in profit. So 2%. No, 1.65% trailing stop. So measured down to the 3 ATR in the hourly from the entry was the metric that I took for that trade, and then stopped in profit. So the same thing with XBT. We did take an XBT long just off that, just a scalp. And actually that was a 0.87% loss for me. So nearly a break-even trade, honestly, but something to do while the market's popping. Or, you know, not popping, I guess, is the thing to do. Anyways, moving on. Let's see here. Completely governed by the 8 exponential moving average. We are not getting much of a reaction from the support level. Not that nice V bottom that we're looking for. Fisher Transform still has us in oversold territory with a little bit of a crossover, but I am expecting this does recross back down. Potential that we could see, just because of the same with Bitcoin that I was talking about. Where do you set your stop if you're trying to go short, right, is the question. Oh, this is Litecoin. Come on, dear Jesus. Justin, it's like you're not even trying, Justin. We do have the potentially to come. Potentially. Oh yeah, guys, very, very impressive wordsmithing from the master here today. We do have the potential to come up here and retest the breakdown zone. The possibility to come up here and retest 116. If that does happen, I will be looking for a short because, again, I do not believe that there's enough volume or liquidity in this area to give us the momentum that we need to move back up. I think that we will see movement back down here to this support level between 89 and 86, potentially even an intraday stab below to where liquidity is going to be placed. So, what would this not tell me that I should be putting on a short? I'm not going to. So we do have a 16% movement downwards for Ethereum. So logic would tell me that I should be putting on a short. However, being in no man's land and being governed, well, okay, so let me put this another way. If you are in a short position, there's no indication that you should be out of your short position at this point in time. We've got no bullish indicators. Again, unable to really even convincingly intraday trade above the 8-period exponential moving average. So until that changes, individuals, in my humble opinion, should be in their short position. Obviously, though, you do have you're in your take profit area, at least, take profit 2. Your first take profit area on a positional short from this, whether you were going overbought, whether you were going rejection from resistance, whether you were short from here, after this momentum breakdown candle. This is not oversold. This is a breakdown candle. So when you have oversold candles look kind of like this. They look kind of like this, where you're at the bottom of the trading range, and then you get a high volatility stabward down into a key support level, likely to get a reversal from that. However, I do have to take other factors into account here, which is Bitcoin, essentially Bitcoin. So I think the way that I'm going to play this is I will be more apt. What did I say about Bitcoin? I said that I will be more apt if price goes in this range before it goes to this range. I'll just be looking to put on shorts. However, I will qualify that with Mr. Ethereum over here, where if we do start trailing up on Ethereum, I will potentially look to be putting on a long in Ethereum to counter the hedge that I'll be looking for XBT. So I'll play them against each other. But ideally, what I would like to see is the return to support or even a wick down below resistance or support here, so that we can tap into enough liquidity to move us upwards. What's that level where I will potentially be excited about a long? Maybe 116.08. Maybe 116.08. Potentially, I'll go long on Ethereum and short on XBT, and I'll decide which one has the momentum, which one is performing better. I'll take the losses out of one and put the capital into the other and scale into the position and be overall profitable. Yeah, not a whole lot to say, guys. Not a fantastic area to be putting on positions one way or the other. Interesting phone call, but I can't take that right now. I apologize, good sir. You guys. Oh, you guys. Oh, hey, sorry, man. Hey, thank you so much, Zuhair. I appreciate the 200 rubies, my friend. I'm glad you got out in time, man. Thank you so much. And congratulations on a good trade. You told me that you were in from like 5 something. So, hey, kudos, man. Good trade. Thank you for the coffee, man. Oh, shit. Let's go up here. Wayne says, here, I gotta make notes so I don't forget stuff, guys. And that's kind of the problem with going into my full analysis and then trying to engage with chat, is that I'm like, oh, I gotta scroll up, and now I'm looking at stuff from a year ago. Got it at TRX on 752 to the buy side, I'm gonna assume, and I'm gonna assume spot price, and I'm gonna assume Binance. We'll take a look at that. Hey, Daniel. Good morning to you. Good afternoon. Good evening. One of those. Yes. Hey, Caleb. Thank you so much, man. Trex. Where are all the 589 XRP fans at?
It's over 9,000!
Do I think Bitcoin will bounce off the 200-day moving average? I think you mean the 200 weekly moving average. So if we go to, oh, this is Ethereum. Pardon me. Yeah, I did want to, I should have talked about that. My bad. So we do have that 200 simple coming up on us. And that's right where we're at. We're coming up on that weekly 200 simple and getting the reaction from that as well. Now, if we go back and look at the last time we interacted with the 200 simple, we actually did get a nice healthy reaction, or we got an intra-week stab down to form our swing low. So that's really what I'd like to see. I would like to see us actually violate this on an intra-week basis. So we'll just wait to see. Let's go take a look at the monthly and look how the monthly is going to look. All right, so here's the monthly. On the monthly, we do have a fresh from right here. So last month, we had a fresh cross under of the 8 exponential and the 21 exponential, okay? And that's generally your initial trigger. Now, on your intraday timeframes, they're too slow to trade on generally. That's why your general trigger on your 21 or your 4-hour chart is your 21 over your 55. So the amount of weight that I'm going to put on this is actually going to be so. So let's look at this monthly chart in a little bit more detail. Where are we at? We are at the bottom of an HVN. Generally, when you come to the bottom of an HVN on the first go through, you did come back up here to experiment with the top of the HVN. That would be positing us returning to resistance at 43.77. Generally takes a few taps on the bottom of the LVN before it does break down to the downside. As you can see, it took, pretty much, 1, 2, 3, 4, 5, 6, 7, 8, 9 months to break to the downside from this HVN right here, hanging out right at the bottom of it, as you can see. Monthly momentum is slowing down. However, generally, another thing too is I came across this YouTube video the other day, and the guy was talking about, the title of the YouTube video was, "This trading strategy will change your life." Yeah. And he's like, "Look, man, all you need to do is if the candles get bigger, you keep going. The candles get smaller," and this is not racist, I'm sorry. "If the candles get smaller, you stop going." And I'm like, no, that's not how it works. That's a gross oversimplification, because generally when you approach support on low volatility, you tend to break through support. When you approach support on high volatility, you tend to bounce off support. Conversely, when you approach resistance on low volatility, you tend to break out. When you approach resistance on high volatility, you tend to get rejected. So the whole shrinking candles equals change in momentum. No, large candles signal change in momentum. Small candles signal no trend reversal. In my experience, in my opinion. So yeah, still a bearish monthly, man. Opening and closing below the low of the previous month. It's just bad to see, man. We have not been able to get a month that actually closed above the previous month since back in July. So the month of July did close above, but since then, it's just been one monthly candle after the next. And this really could have been your signal to be short. I mean, many indications for it, but whatever. So that can be another good leading indicator. Another good leading indicator is if we can finally get a monthly candle to close above the open of the previous bearish candle, might be a good indication that we've had capitulation. But really, I'm looking for the more pronounced signs of capitulation. So I don't know if this is going to go back as far as I want it to. Yeah, this kind of shows a poor example of it. The monthly candle that reversed us last time in December to January of 2015, but December 2014 to January 2015. But if we go to the daily, you can see that this is just a highly that's a 40% stab down and then right back up within the course of a day. That's really what I'd like to see, honestly. The other way the capitulation can happen, though, is just a slow descent or sideways descent into nothingness, where there's no volatility and no interest in trading. So I really don't have much to say about the monthly candle closing below the 55 monthly exponential moving average. Let's see. I believe I have this set to have all my EMAs on there. So yeah, in fact, there's just not enough data to posit in 100 yet. So potentially we could try the 81, which would be kind of our next go-to. Let's try the 81. Yeah. No. Oh, my bad. It's not going to work because of min-val, the way that I coded this indicator. Yeah, so here's our 81, which would kind of be your next EMA go-to after 55, in my humble opinion, just the way that I was classically trained. That's coming in around 2204. And that's given some good confluence. If you guys are new to the channel and I haven't talked about the long-term, downturn price predictions, that is formed on the weekly. Let's go to the weekly real quickly. And let's throw on the good old log real quick. I don't know, I'm talking about Bitcoin like prolifically. My bad, I apologize. Some people are like, get to something else. Okay, don't hurt me. Let's turn this stuff off briefly. And I still have yet, sorry guys, I still do need to redo my chart. I know, no excuses. But anyways, we do have this, the next high volume node down here coming in from 28, well, actually, excuse me, the actual true metrics on the log chart are going to be this resistance zone right here, kind of like pretty much where I have my stop loss. 29.54, and that range really does extend down to 1961. But the HVN that I'm interested in only extends down to around 2200. The key level there for me is going to be that $31.36. That is the 88.6 Fibonacci retracement of the previous swing low to the current swing high, measuring the last bullish cycle of Bitcoin. And that is actually where we bottomed, according to Fibonacci, or on the Fibonacci retracement tool. In the last bear market. So keeping a lot of eyes on that. I do think that it is likely that we end up moving down there, but I cannot give you any time. I don't have a crystal ball, guys. I don't have a crystal ball. It just seems likely, unless we see the volume and liquidity to break out of this zone, which we will see a retest of resistance, but whether or not we close above it, if we close above resistance on a weekly time frame, I will feel very confident about a return to 5,500. Very confident about a return to 5,500. That's when I will be putting on my position along, or holding open my position along and doubling down on my position. But okay, I think we've talked about BTC and Ethereum enough. So let's go here. The bull market will start again late summer and go to the end of 2020. Cogito ergo. Hey, I haven't seen you for a while, man. Good looking out. Patterns are painted by bots to learn retail. Yep, that is kind of my personal opinion, honestly, as well. Bears can't even dump more than 50 bucks. I think they are exhausted. Potential. Ross, because below that level, I'm looking to put on a positional short. Randy, sorry, man. No, not every day for an hour and a half, but I just like to explain to people my thought process. CBN5 says, looking back a few months, we saw price bouncing off resistance, making lower highs multiple times before breaking down to 3,500. I think it's not unlikely that we see something similar again. I agree, man. Oh, okay, Randy, yes. You guys are funny, man. Watched him for months, you knew. You guys are funny, man. Oh, sorry, man. I completely missed your donation. Sanjay Kumar, thanks so much for the 20 rupees, man. I don't see a comment, but I just want to thank you so much, man. Zuhair, yeah, I'll take a look at Gren on coin signals, man. Okay, due to popular demand, let's look at Ripple. Okay, according to K7 Jixer 1000, I am legally obligated to be bullish on Ripple. So let's just go over what we talked about yesterday. If we measure the entire cycle of Ripple, we're looking at the daily on Binance. If we measure the entire cycle of Ripple, price did pull back from the swing high all the way down to the 786 Fibonacci retracement around 492. Okay. Typically, when you purchase the 786 Fibonacci retracement, you target the 382. When you purchase the 618, as we see right here, you sell the 236. That's your standard Fibonacci strategy. As I said, without a significant change in volume or sentiment, we're unlikely to see an end of the dominant trend. And what did we see right here at this level? Once we hit that 786 Fibonacci retracement, we did see a reversal pattern. So you guys do know how I feel about Ripple, so it does pain me to say this at points in time. But I do have to feel fundamentally bullish on ZERP right now. We are right back to that roughly. I mean, it's 618. Okay, here's actually the halfway of the market. But look where we are. I mean, it's such a critical moment, guys. It's such a critical price level action for ZERP. Okay, we have pretty much half of the bull cycle right here. We pull back, we find support on this level, pull down. Once we retest this area, it's rejection. We get a fake out to kind of lure in the buyers, and then the pullback, and then the confirmed rejection, and then that's the confirmed kill right there. When you get a fake out, you pull back and you reject from resistance, it's a confirmed kill. And then again, this area acts as resistance. It acts as a consolidation area, which is what we're currently in right now. The bullish perspective on XRP does posit us looking at the daily time frame to have a target around 14,219, and cutting your losses if we do end up falling below the HVN. So that's where I've set my stop. You can feel free to play, faster or looser with your stop. Of course, this is not your optimum entry. This is just an example, and is not the personal trade that I have put on, nor am I going to until we get something that looks like this, but where we don't pump fake down. So I want to see a movement upwards and a close above this level, and then a pullback, and then the bounce off. I want to see the spring. I'll buy on the spring. I will buy on the spring. Until we see that spring, I'm not going to be doing anything with XRP. And I probably will not be looking to put on my short if I'm completely invalidated and have no idea what I'm talking about until we close down below that green line. And then I will double my position if we close below this HVN, if we close below the consolidation area. Hey, what's going on, earning teacher? Hey, thanks, Satoshi. I appreciate it. Let's take a look at some other metrics here. All right, so we do have our 200 simple and our 200 exponential kind of curling up, kind of moving up there on us. We did find support off that 200 exponential is where we initially bounced. Getting a little bit of rejection just as the market, you've got to see a little bit of a reaction from this, but you approach resistance on high volatility. As I said earlier, I do have to be logically consistent in my method of analysis. When we approach resistance on high volatility, you often do see rejection from that level. So the ideal or the optimum entry might be a little lower than we currently are in price, okay? But everything that I could possibly say here, honestly, is less relevant than just understanding positionally where we are in the market. We're at the turning point. Hopefully you guys can see that. Look at the volume profile. This is the level. This is the level when the decision of are we going up or are we going down is made. It's in this range right here. If there's going to be more buyers than sellers, we're going to go up from there, and you're going to know in time. So if we start moving up here from the bounce off support, we're just having this higher consolidation at a higher period, guys. Now, whether this is reaccumulation or distribution remains to be seen. You do have to wait for confirmation. And why is it okay to wait for confirmation? Like, why? The response that I get is, well, you're saying it could go up and it could go down. Yeah, because it can. Like you wait to see, and then you go. Oh man! And why is it okay to wait for confirmation? Like, why is it okay to understand that you don't have a crystal ball? Because let's say you don't even buy until you make a higher daily high, okay? A higher daily high. You still got a 30% trade. This is crypto, guys. All right, guys. Let's talk about some news. But before I talk about the news, it's 3:05. I got to go grab some water, and then we're going to break down the news, and I'll look at your requests. I see NPXS. I've already gotten a request for Tron. I'll take a couple more if we have time. So let me go grab some water. I'll be back in like one minute, 30 seconds, something like that. And then we'll break down the news, talk about what's important right now, and we'll look at your requests, guys. So don't go anywhere. We will be right back. There we go. All right. Thanks for holding in, guys. Want to thank all the viewers today. A lot of live viewers. Thank you so much. All right. Re-upped on water. Let's get back into this. Now, we're going to do some news, guys.
It's over 9,000!
First, I do want to give a shout out if I missed you guys. Sorry so much. Let's see here. I think I missed a lot of them. Jan, Davilan, Mark Cullen, Ochidoko, Pradeep, Sanjay, Hamit, B. Pasker, Lucian, Video Game Movies, Suman Borman. Thank you so much for the subs on YouTube, guys. Highly appreciated, guys. Welcome, welcome, welcome. And we also got Rasman457. Thanks so much for the follow on Twitch, guy. All right. Let me switch my screen here so I can see what you're looking at. All right. First thing that kind of stood out to me today. All right. So this is kind of the big news of the day. I do think this is important. So Binance will now allow you to purchase key cryptocurrencies with a credit or debit card. Binance, which is one of the largest exchanges by volume, doesn't have any fiat onboarding, okay, because they don't allow fiat trading, unlike Kraken, unlike Coinbase, unlike Finex, for example. So if this is old news to you guys, or excuse me, if this is new news to you guys, you can go to Binance right now and purchase funds, purchase Bitcoin, Litecoin, Ethereum, and ZERP with your credit or debit card applied to Visa and MasterCard. There's a couple states that are excluded as usual: New York, Connecticut, Hawaii, Georgia, New Mexico, and Washington if you're in the United States. Worldwide, it's a little bit better. The payments are being processed through Simplex, which is actually an Israeli-based credit card payment company. Not a whole lot here. The only problem is that it's pretty expensive. According to this article, it says that right now the price is a little over 3,462 according to CoinMarketCap, but Binance's price is 4,662. So I can't confirm or deny the validity of that because I have not done this myself. Maybe I'll do a little test purchase like later on tonight just for fun. Maybe I'll do it with the subscribers or the people in the premium group. We'll check that out. But with an additional 3.5% fee or $10, whichever's higher per transaction. So if you guys want to get completely fleeced and just have the convenience of instant credit card purchase, then just use Square Cash because it's a lot cheaper, guys. You can do the exact same thing through Square Cash. You get your crypto pretty much instantly. Abra is another alternative to that. Personally, I've always preferred purchasing my Bitcoins P2P, so I have good relationships with private sellers. I think that's the way to do it. Again, I'm not a tinfoil hat kind of guy, but I do care a lot about my privacy, so I do prefer to do my purchases that way. But it is what it is, man. It is what it is. Let's see here. That's pretty much all for that, guys. So you can go over there and take advantage of that. Obviously, Binance has Jersey right now. If you are if you're in I believe it's just Great Britain, might apply to the entire Eurozone, where you can buy crypto with British pounds and euros, and Binance Uganda, where you can actually purchase with Ugandan shillings. So fiat onboarding's coming out from Binance. They're really trying to grow and expand their market cap by doing that. What effect will this have on the market? Could be positive. I don't think that it's a coincidence, though, that we see after this announcement of purchasing of fiat onboarding. And what's interesting is that when we go look at that market depth ratio, the market depth that we were talking about earlier, we see Tether very high, USDC very high. We see the market depth ratios very high on those, as well as the big cryptos as well. And what that would imply to me is that there's a lot of money entering the space, because if the market depth was just high on stable coins, but relatively low on Bitcoin, that would be a bearish indication, meaning that money is flowing into stable coins and out of your traditional cryptocurrencies. And conversely, when money is flowing out of stable coins and into cryptocurrencies, Bitcoin, Ethereum, Litecoin, Ripple, for example, ZERP, excuse me, it's not Ripple, the price is going to go up. But when I see the market depth high on stable coins and the big coins, that would imply to me that there's fresh money trying to enter into the space. So take that with a grain of salt. That's, as you will, I've already laid out my bullish bias for Bitcoin. So, you can agree with me or disagree with me. That's totally fine with you. This isn't super interesting, but I just thought I'd point it out. The New York Attorney General blasting cryptocurrency exchanges. This is nothing new. Traditional, and again, having been in the traditional finance sector, I can sympathize and understand with this. There's very little consumer protection. There's the markets are controlled by bots and algorithms very commonly. You have to be quite a savvy trader. But what's nice about cryptocurrency, and why I choose to trade cryptocurrency, is that if you are fairly proficient in your technical analysis and your trading methodology, you can be quite profitable in cryptocurrency. Like even in a bear market, like the reactions are quite volatile relative to stocks. I mean, you get a nice 2 to 3% bounce usually off an alt. So I mean, if you have the right metrics and you're using the right software that allows you to like trail your stop loss up, that allows you to be out, that allows you to not have to watch the charts all the time. Trading cryptocurrency is still quite profitable. I mean, even related to other things. If you're a retail trader and you have some basic technical analysis skill, I think you can be very successful in this space. But you just have to not trade like 90% of retail traders. And most people who are coming from traditional equities or Forex, for example, into cryptocurrency, it's quite different. Quite different. In fact, it's better, is my personal opinion. Cryptocurrencies respond better to classical charting, better to classical technical analysis, with higher volatility than you would traditionally get in other aspects. The problem with stocks, equities, Forex, and I'll get into this. So let's look at what happened here. So the New York State Attorney General basically released, kind of like a voluntary questionnaire, I would say, to 13 major exchanges. And he did this in-depth analysis. Now we had a lot of exchanges reply to him. So yeah, Bitfinex, Bittrex, Coinbase, Gemini, they responded to him. Binance, Gate, Huobi, Kraken basically told him to, go shove it. They didn't answer his question. And what he said was, based on the results of our report, we have also referred 3 platforms, Binance, Gate, and Kraken, to the New York State Department of Financial Services for possibly operating unlawfully in New York. So it's not like you were allowed to do that in the first place, but New York citizens constantly always getting hosed, thanks to the New York agreement. Awesome, amazing for them. So he's talking about one of the things he pointed out is something that we've known for a long time. Is not anything new to traders in cryptocurrency, is that there is a lot of exchange-run regulated volume. So Coinbase, for example, told the AG that close to 20% of its executed volume was its own trading. Why is this a problem? Because if Coinbase decides to stop executing trading of their own, that's 20% of liquidity, then liquidity could dry up for individuals trying to get out of the losing position. So if the market starts tanking, there might not be buyers for you to exit your position if Coinbase decides to stop, essentially. It's not wash trading, that's different. Wash trading is when you're trading, when one entity is trading between itself using a proxy. So that would be Coinbase trading with itself. That's not actually what's going on here. And that's not to say that wash trading does not occur. We know it does. Let's see here. Yeah, I mean, so basically everything he says is negative. I'm not going to let you guys watch paint peel by like reading this whole thing, but essentially, one thing that's interesting is that Kraken said that, hey, market manipulation, that doesn't matter to most crypto traders, even while admitting that, quote, scams are rampant in the industry. So this is a fairly negative article from Mashable, but just understand what you're getting yourselves involved in when you're trading cryptocurrency. Of course, you have to keep yourself secure, understand the risk that you're taking, and only invest or trade what you can afford to lose, guys. Don't feel like I should have to say that. Super quick, guys. The NEM Foundation. So this is the latest in the kind of foreclosure and the complete, like bankruptcy of projects. We've seen Ethereum Classic. We've seen Steam, the coin backing Steemit, and now New Economy Movement, ZEM, NEM. They are close to bankruptcy and they might start layoffs next month. So what's interesting about this is that I cannot, based off this, look to take a trade on them. But we did see Ethereum Classic just nosedive after this and then take a nice little bounce. So, and then just nosedive again. So I would definitely not be, if you got some NEM, probably a good time to dump it. Just saying, But we can trade anything. This is crypto. I mean, there's so many zombie coins. It's very rare to actually be able to come up with a coin that goes to zero. I mean, there are thousands of zombie coins that just like still are traded like a little bit back and forth on exchanges. They go up a little bit, they go down, they get pump and dumped, every like 3 or 4 months. But yeah, there you go. So pretty negative news about NEM. We'll get into that. We'll get into that next. Now let's talk about BitTorrent token sale. So obviously the BitTorrent token sale rises 6-fold as the majority of alts are drowning. So we do know that the BitTorrent token was launched for trading today on Binance. All right, interesting. And the last time I checked, up over 100%. So pretty nice, not too bad. From 6 to, I think, to 30 Satoshis or something like that. I have to double check that. Obviously, they raised millions of dollars in a matter of minutes, blah, blah, blah. And this little blurb that they say, despite the fact that some technical difficulties took place, we're going to get into that with the next article. But anyways, fucking crazy, dude. So at the time of this article writings, this was a little bit behind the times, but 88 to 77% value rise just over a few hours at the time of writing. Let's see here. Obviously, people were allowed to purchase BTT with BNB. We saw that nice rise in BNB at the same time, and then a nosedive, kind of like where everything took a nosedive, recovering quite nicely, as well as MDA, which we were looking at on the chart. So if anybody was watching the charts and took the MDA trade that we suggested, although price did take a nosedive fairly shortly after that, as did most of the market, actually. That was like 2 days ago when we were doing that on the live stream. Obviously wasn't a trade recommendation, but just a suggestion for what we could take. Price did rise back up and actually let you get out at profit. So, but whatever I don't know, whatever helpfulness that is, you know what I mean? How I made, thanks for the sub. We're not in the market cycle where we were back in 2016, 2017, where you never sell at a loss because price will just come back up. We're not in that. You want to sell at a loss. So. Anyways, so not a whole lot that I want to say at this point in time. I mean, this is just such a long, stupid article. But anyways, just want to talk about the torrent sale. Now, this is what I want to talk about. What went wrong with the BitTorrent token sale? So obviously the highly anticipated ICO for the BitTorrent crypto token BTT was completed today, but it has started a whole new discussion on what went wrong and why so many investors who tried to place orders weren't able to do so. So I don't know how many of you watching tried to participate in the BitTorrent token sale through Binance. But very few people were allowed to buy it, okay? And very, very, spooky action at a distance, you know what I mean, in the words of Einstein. So Binance had organized the token sale through Launchpad. Actually, people are calling it CrashPad now because of what happened. It was a TRC10 token, obviously, for BTT. It sold out in about 20 minutes, raised about $7 million. However, very quickly, it was at this moment that CZ realized he just messed up. However, very quickly, it became painfully clear that many investors were left outside in the cold due to the so-called astronomical demand, system overload on BitMEX, anybody, and technical issues with the Launchpad system itself. Many users were unable to actually purchase their platform, and reports of this actually happening range from, once they clicked buy as the token sale went live, the site crashed, to once they clicked live, the CAPTCHA came up and blocked them. No matter how many times they clicked buy, just the CAPTCHA came up. So, it raises the question. Well, let's finish reading. Let's finish building the case out, and then we'll raise the question. We'll see if we're begging the question, actually. Yeah, so here's a tweet from Mr. Peter Dale. If you're in the chat today, man, shout out to our brothers and sisters. I was in the Tron session, clicked buy within a second after launch, and faced the same crash site. Literally no chance to make my purchase. The airdrop won't pay out on the same scale as I was willing to buy in the launch. A lot of honest investors hung out to dry. Was very bad experience in BTT ICO. Couldn't get any single BTT. What important? Only a few hundreds got to buy in this so-called public sale, centralized sale in the name of decentralization. Just over 900 people were actually able to participate in the ICO. Deep pockets, anybody? So, and it jumped to 28% after launch. So, I mean, what does this imply? Does this imply that Binance intentionally only allowed select few to actually purchase? Did you have to be in the know? Did you have to know the password? It's New England Clam Chowder, for anybody who didn't know what the password was. It's always New England Clam Chowder. Anything super secret, anything Illuminati based, it's New England Clam Chowder. It's the password. PSA. And then immediately, because everybody wanted to get into the token sale, they're going to run in and buy up spot price, which is going to rise the value of the asset. I don't know. Interesting. So just a wave of negative comments on Twitter, etc., social media. And, I like this little conciliatory throw out that Justin Sun makes. He's like, I would like to explore the possibility with Binance to give away free BTT to everyone on Launchpad fails to get BT. To everyone on Launchpad, I don't know, these guys' grammar. It's not hard, guys. The BitTorrent community wants you, not 100% guaranteed. Need to figure out the details, but retweet if you agree. So retweet that if you want to. And then CZ says, sorry about the bad experience. We'll improve for the next one. Thanks for your support as always. So CZ did respond by saying that Tron had agreed to organize a small airdrop in order to make up for the bottleneck issues, #manipulation, and the overload experience for some users, while apologizing to those who had a bad experience during the BitTorrent token sale. We don't care, man. No consolation, dude. You biffed it. You messed it up. You had one job. and one job only. You failed. You failed, sir. Good day.
It's over 9,000.
So anyways, I wouldn't be satisfied with this. You know, like if I was trying to get in on the BT token sale and then I just got harangued like that, I just got hamstrung like that. I mean, you know, what else are you going to do? If you want BTT, you're going to run in and buy it up on the spot. And that's why it's up so high. All right, so this is just kind of a travesty, man. Just kind of the things that you see happen in the crypto space, man. You know, you had one job, man. Just one job, dude. Just one job. Ron Legato says, damn it. I wonder I couldn't get through. I was trying Manhattan clam chat. Yes, it's New England, yes. And then potentially, you know, again, this is allow me to trot out the magical Vitalik Buterin Ethereum rainbow unicorn story of the day. So the CBOE did resubmit the VanEck SolidX ETF proposal to the SEC today after they reopened. Announced Thursday by VanEck digital asset strategy leader Mr. Gerbax. The January 30th filing would, if approved by the SEC, allow the CBOE BZX exchange to list shares of a Bitcoin ETF trust. Many proponents of a Bitcoin ETF believe that the fund will help bring fresh money into the space, creating a more liquid market. If only. If only. Of course, they withdrew this proposal earlier in the month because the government was shut down. They felt that it would get rejected, even though there is a law in the books that says that if the SEC is shut down, proposals get automatically approved upon a certain metric. But the reality that would actually go into effect, and that afterwards it wouldn't just get shut down and dismantled if it would just passed on some. I mean, you can't. It wasn't going to work. I mean, I saw stuff out there that was like, the ETF's going to get approved because the government's shut down. The SEC can't do anything about it. Dude, that's not the way the world works, dude. The government doesn't follow the law. Okay, like I just want you guys to understand that. Like the laws are not designed. Okay, let me repeat that. So the founding of the United States of America, laws are in place to protect citizens from the government. Believe it or not, that's how it's supposed to work. That's how this country was founded. America. The laws exist to protect the citizen from the state. Okay, but once you reach a certain level of empire, and again, I'm not one of those people that say that America and Western civilization is terrible for the whole world. In fact, quite the contrary. I think that Western civilization has done the most for the world, more than any other country. Excuse me for that, but that's just how I feel. Okay, lost train of thought after I just lost half my subscribers after saying that I'm proud to be an American. Let's see here. Okay, yeah, sorry. So the government or laws initially exist to protect citizens from the state. However, once you reach a certain level of bureaucracy, the laws no longer apply to the state. And that's kind of the point of Bitcoin here, guys, is, you know, security, protection from the state, decentralized currency, something that's government hard. That's kind of why we're doing this. Rah, rah, rah. So CBOE's filing comes weeks after New York Stock Exchange ARCA filed its own proposal with Bitwise Asset Management. So neither of these proposals have been filed in the Federal Register yet, meaning they don't have any deadlines. So is this positive? Is this negative? Is the ETF coming? Rainbow magical unicorns? We don't know, guys. We don't know. So just thought I'd throw that out there. All right, enough with that. Let's get back to the charts. And yes, Binance did pull a Ray Finkel, man.
It's over 9,000.
Benjamin Schwab and City TV, thanks so much for the subs, guys. Yeah, I love it, man. All right, guys, so let's look at, I got some requests. So let's look at the requests. Let's do some things, polymath. Let's go. Let's go, let's go, let's go, let's go. Tron is the first request that we got today. Cardano is not as cool as Tron, but it might be a better platform. Okie dokie. So let's see here. Without a significant change in volume or sentiment, we are unlikely to see a change in the overlying trend, in the underlying trend, right? Right, that's what we said, right? Okay, so is Tron going to continue to skyrocket? Is it going to crash down? I'm going to have to put my money on it's going to have to come down, all right? Just at least to form something like a cup and handle pattern. Something like that. Now, traditionally, when you're looking at a cup and handle pattern, we'll talk about this. Traditionally, when you're looking to do a cup and handle pattern, you want to buy between the 236 and the 382. Okay, right here is where you're going to buy for your handle. And you set your stop loss below your 0.5 Fibonacci retracement, which is kind of frustrating because your next area of entry is obviously your 618. With your stop loss below your 786 is the other way to look for a cup and handle entry. So what do we see here on TRX? Blow off top, an attempted SFP on low volume. Sorry, let me use, for those of you who don't know what I mean by that. What I do mean, of course, is a swing failure pattern. So we did attempt to make a higher high. So something that we'll often see is price will attempt to make a slightly higher high, unable to close above the higher close on a daily basis. Now, this is not really indicative of an SFP. This is more a blow off top and then a retest of the range high on weak momentum, on weak volume. Now, as I said earlier, when you approach resistance, significant resistance on low volume, or excuse me, not low volume, but low momentum, you do expect it to break through, because what that would imply is that buyers have not exhausted their trajectory. Buyers have not exhausted their liquidity. And there is plenty of capital left in the buyers' pockets to actually break through and push up into resistance. But, you know, we don't really have significant resistance here for TRX until up here now, until up here significantly. This level, I guess I could start redoing this a little bit. This level is okay, but you know, TRX has not ranged that much, honestly. You know, we've got clear delineations here, but as I said, kind of the similar thing when we're coming to the bottom of the HVN. Typically, you don't break through the bottom of the HVN on the first pass through. It typically takes a few to break down through there. So we put in some nice strong support down here in this accumulation zone right here. And while the chart does look overall fundamentally bullish, we've had a nice parabolic rise up. We were unable to make a higher high. So classically, I do have to look at that as a sign of trend failure and expect price to come down. So that's where I have to place my bets at the moment in time. You can clearly see where I have my stop loss. You can see my target. That is subject to change in the near future if I do see signs of a trend reversal, but do not see any fundamental reason to not be short on TRX at this point in time. So trade still live. And we will update as we go. Oh, you bought it at 752. Yeah, I don't think that's a good choice. So JMG, the proper way, in my opinion, to use technical analysis is you can just use technical analysis by itself, and you'll be better than just somebody randomly buying and selling without any understanding of where price is in relation to its range, in relation to resistance, in relation to volume and liquidity. So just having an understanding of how, in general, the markets move and respond to key levels, key turning points in the market, such as support and resistance, that's going to put you just way above most standard traders, or excuse me, most standard investors, and actually make you a better investor overall. Now, what's going to make you a better trader is utilizing your technical analysis with a fundamental understanding of how other market participants are likely to respond psychologically to certain levels. So, are people more likely to buy or sell here? Is a good question that I ask myself a lot. Does it make sense that people are buying at this level? And if it doesn't make sense that people are buying at this level, then I typically look to counter trade them. And again, you want to look for areas where there's lots of liquidity for key turning points in the market. You want to look for high volume spikes to get high volatile movements because you need volume, urgency of buying or selling, and liquidity, the supply of that buying and selling, to significantly move the market. Kibo just bought a yo, Kibo, I haven't seen you here in a while, man. I'm pretty sure you're... Now, I don't want to cast aspersions on you, man, but last time you were here, you were talking about some bicycle coin. And then Pundi X. So, actually, good call on MPXS, man. Good call. I'll give credit where credit's due. All right, TRX. Let's look at MPXS. Pretty insane buying. Yeah, we've known NPXS has been doing things for a while now. So we've got our consolidation range right here. We've got support, we've got resistance, pretty firmly established right here. So we do have to start. We do have to start with that as our analysis. So we've got support and we've got resistance. Now, did it make sense to buy here? Yeah, accumulation sounds good. Highly volatile, low sat coin. I mean, we're talking about, this accumulation range is like freaking 30%. Yeah, you got like a 25% accumulation range, 30% accumulation range. All right, cool. So let's zoom in here a little bit. And let's get rid of volume for a second. Let's just get rid of volume and do price analysis here, guys. Okay. Bearish, or excuse me, so we see here bullish divergence starting from this low on the daily time frame. Bullish divergence, bullish divergence. So you would have probably initially entered potentially a position here. Especially, let's see if the volume would have given you confirmation of that buy. No, not so much. You probably would not have had your initial confirmation for entry, at least the way that my standards are. So, without getting into too much detail, because again, you guys have to understand that I am a competitive trader, and I do this show to help you guys learn. I do this show to help you learn and not make the mistakes that I made as I began. Although invariably, that's probably an impossible pursuit. You will inevitably make some of the same mistakes, but that's why I do the show, and that's why we do have the Cracking Cryptocurrency Trading Group. To help you guys avoid some of those pitfalls and hopefully accelerate your learning process. Or if you're already experienced, just to bring things to your awareness that you might not be aware of. So just to give you an idea of what I look for in the markets and what I have programmed to help me out with that is essentially a volume scanner. So I look for oversold conditions on high volume. Oversold conditions on high volume are typically excellent entry points. So this would have came up on my radar. Because what do we see? We see oversold conditions, and we see a big spike in selling volume, likely indicating oversold volume, likely indicating that all the sellers that want to sell have now sold, that they're now exhausted. And what happens? We move into accumulation, and then pop. All right. So very, hard to say, man, when you get that nice blow off top. Obviously, an extreme reaction from MPXS right now. Obviously, an extreme reaction from MPXS. Typically when you get, typically when you do see a nice volume spike like this out of accumulation, it is a sign of strength. However, does it make sense to sell or to buy here? Approaching resistance on high volatility. We've got resistance another 20% above us, and we are up from the median of the accumulation range. We did reach a high of 80%. Currently still up 32% if you would have had the nuts to accumulate in the accumulation zone right here. So resistance generally does not break on the first pass through. Again, that resistance coming in at 24 Satoshis, price currently trading at 16 Satoshis. So just the way that I would look at this is if we can fall back down, or let's see here. So let's take a look at the volume profile. We'll just be completely honest about this. Okay, here we've got our high volume node, and we've got horizontal support, or excuse me, horizontal resistance that we are looking for an SR flip. Okay, so if you wanted to enter into position in NPXS, this seems an area where you would want to take a speculative stab. The problem is, where do you set your stop loss? Where do you set your stop loss? Daily ATR is 3 Satoshis. So your low on this candle is 15 Satoshis, so your stop would have to be placed at 12 Satoshis. See, I don't really like that because then now we're right back down into previous support and accumulation. So does it make sense to buy a high volatile dip? Well, we'd have to zoom down to a lower time frame to see if this thing is looking like it's turning around at all. Let's zoom out. So we've got our nice high. We'll blow off top, and then we have that SFP right there. There's that nice SFP on low volume, and then price does reverse. So all of this happening very quickly. Yeah, here's the 30-minute chart. So all of this happening very quickly over the course of a very little time. I don't know. It doesn't look like, you know, I'm not going to lie, man. It does not look like a buy to me. It does not look like a buy. Now, I'm not going to chide anybody who takes a stab on this. It's not a situation that I'm going to buy. Again, I like to look for those more opportune times in the market. I don't really like buying pullbacks like that. Again, there's some positive stuff here. 618 Fibonacci retracement, SR support flip, high volume node. So I definitely see it, man. And typically the way, so this is the trade. If you want to do it that way, which I think it might be a little bit more relevant. So Fibonacci retracement, swing low to swing high. You buy the 618 and you target the 236. So if you do that, you got a 30% trade on your hands. Where do you set your stop loss? Again, right below your 786 Fibonacci retracement is generally the way you do that. So you have 15% stop loss. So 2 to 1 R to R might not be a bad trade. Typically, you would want to see more oversold volume though. At the sell down, you do want to see that oversold volume. Let's see if we can get oversold conditions on anything. Oversold on the 4 hour. Oversold on the 4 hour. Of course, we were oversold right there too. Four-hour oversold has been a pretty good indicator, but we also didn't have these same conditions. So there's the trade, guys. Entry at 15, 16 Satoshis. I'd set buys down here at 15. Target of 19. Stop loss at 12. It's the only way to do this, man. Now, you can go ahead and set your stop tighter if you want. But, I mean, this thing's so goddamn volatile. We're talking about 1 sat ticks. And naturally, when you have a 15% stop loss, you need to reduce your position size. And then if price moves in your favor, you can add to your position size and tighten your stop up. Yeah, go ahead, David. Hey, thanks, Insurance. I appreciate it, man. MPXS, harm. It's MPXS. Hey Doc, it's available to subscribers. So when you join the Kraken Cryptocurrency trading group, you get access to all my indicators as well as the automated strategies that I'm rolling out. So there's some modifications to this as well. Yes. I can't take all the credit for the time transformer. I had some people help me out with it. The genesis of it was actually another individual, but I've taken it. I made the levels a little bit more precise into how it reacts to horizontal support, or excuse me, not horizontal support resistance, but overbought, oversold, and the overall wave cycle. What Fisher will tell you as it responds to the neutral line. And no problem, Arm. Okay, second request that I did have was Skycoin. At some point, Doc, you know, once we get the online store a little bit more rolled out, like we might offer those like a la carte options, because I know a lot of people have requested them. And it's not like I'm trying to be a jerk or anything, guys. It's just that I've worked hard to develop a lot of this stuff, man, and you know, this is my edge in the market. Can't give it all away. It's just like I talked about yesterday. I have a proprietary trading strategy that I've been developing for the last 2 years, most likely, to be quite honest with you. And I wasn't exactly sure how to translate that into Pine, but now I know how to do it. And I'm not going to tell anybody how to do it. I'm not going to, you know, my subscribers are going to have access to the script, but not to the underlying logic. And I'm going to take that baby. I'm going to pass that trading strategy on to my son. All right. Let's see here. Skycoin on the daily. Let's see what we're printing here. Bottomed here. High or low? Got a little bit of continuation divergence there. Not super strong, but you have a lower low in price, low on the oscillator. You have a higher low in price, lower low on the oscillator. That's a little bit of continuation divergence. A little bit of continuation divergence. Overall, in this extreme period of contraction, man, what follows, and you can see, look at the average true range. Average true range is measuring volatility. Volatility is probably at an all-time low. Yeah, absolute all-time low on the daily. Now, here's the thing, man. I don't see the selling climax is the problem. I don't see the selling climax. I don't see the oversold volume. See, we do see that. We see the volume spike we see the selling volume spike right here. But we don't have oversold conditions. So what I want to see is oversold and volume spike. That's why this one hasn't come up on my radar yet. The last time we did trade Skycoin, like back in November. Yeah, it was one of these. This is this is November. Yeah, I think this was the last trade we took on Skycoin. It came up on the radar, but not for the oversold volume spikes. Different metric for the data crawler. So. Yeah, crypto operator. That's exactly what we're gonna do. In fact, I've got somebody helping us out with that. Yeah, it does look like it's an accumulation. The problem that I have with it, and it's not always a necessity, you do not always see a selling climax when something enters into accumulation. So what's going on here? Why are the things not working? There we go. There we go. Jeez. Something's wrong with my computer. Remember, guys, when we draw horizontal support and resistance, we draw with a crayon and not a fine tip marker. Okay, so, I mean, the only way that I can do this is I'm looking at Skycoin. We're thinking to ourselves, okay, we're accumulating. Now, I know if I buy a breakout, likely I'm going to get my face melted off. I mean, really, if you're a savvy trader, you can take advantage of this intraday trading. But the problem is most traders don't get out when they should. The problem most traders have is not entry, it's exit. So let's go look at some metrics, man. Excuse me, I'm sorry, guys. Let's go see what the market depth ratio is doing on Skycoin. All right, selling pressure is diminishing. Selling pressure is diminishing. Typically, when I do see this on an altcoin, when we're in that tight price contraction range and I see selling pressure diminish, it is indicative of a sell wall that is diminishing itself, a sell wall diminishing itself. We're not seeing really that concurrent. Usually, what I like to see though is them moving. I like to see the bids and the asks moving toward each other, and then initially you get that crossover. So, the only recommendation I can give for Skycoin here, my good friend, is that you got some targets, man. So let's just take this. Let's just take this baby out for a spin, and then I'll tell you how I would do it. I'd just have to ATR this baby. Average true range 2022 satoshis. So we have to determine our swing low. Now we're drawing in fine tip marker. So now we're talking about entries and exits. All right, let's get rid of volume profile because that is going to distract us. So we're just doing price action now. And we got to pull out the calculator, guys. We want to get it for a cheap price. And of course, we're dealing with big ranges here, guys. So we're going to have to use smaller position sizes. But when I see something like this, I do find and I do prefer to use this strategy. So we have our swing low at 24,800 satoshis. Okay, cool. We can do with that. So 24,800 satoshis plus average true range 2022 satoshis is going to give us 26,822. So we're going to make a line up here. That's a wide ATR, man. I don't know if I like that. I might go down to, well, I'll do the daily analysis just so you guys get the idea, man. Just so you guys get the idea. And then we're gonna have to take 26,822 minus 2022 times 2, 22,778. Oops. Yeah, 24,800 minus 17,723. Yeah, that's unacceptable. Let's do 18,734.
It's over 9,000!
All right, man. So if you are wanting to play accumulation, you want to get it for a cheap price. So the range of entry according to average true range and this strategy is 26,800 Satoshis to 22,800 Satoshis with a stop loss at 18,700 Satoshis. Now, let's do the reality of that. How do you play this out in nature? I would recommend doing 10, 20, 30, 40 laddered buys. So 10% here, 20% at the quartet, 30% at this quartet, 40%. So you're weighting your entry down, should give you an average entry right about here. And then your distance to your stop is going to be 21%, which means you need to be targeting something that is equal to you. So if your average entry is here and you're targeting 21%, you're looking for a 40 to 45% movement, potentially even 50%. You're looking to retest the highs up at this level. Now, why would you want to be buying down here and having your stop loss so loose? You can adjust this to fit your strategy. I did this on the daily chart. If you want to have a tighter trade, go down to the hourly, do the exact same thing. Go to indicators, pull up average true range. Boop. It's going to go on your chart. Now, you guys, okay, so let me be honest with you guys. You guys are not going to have access to this indicator. This was actually written for me. So this is ATR Precision. This was written by a friend of mine. And the problem with using ATR, and I'll show you guys. So let's add regular average true range to the chart. Average true range only goes down so many decimal points. So if we open up the data window, if we look at ATR, here's the classic, here's the built-in ATR indicator. You see it doesn't actually tell us anything because it only goes down 4 decimal points and we need 8 decimal points. So that's actually why this script was written for me. There is one way to get over this. So this is my recommendation, is to use, pull open your indicators, and you're going to go to, you're going to type in average true range trailing stops by Sylvain Ververt. It's right here. The author of the script is H. Potter, average true range trailing stops by Sylvain Ververt, by Harry Potter. And we load that onto the, no. So as you can see, it's in my favorites because this is what I use to get around this for altcoins. Because I have multiples. Okay, so here we have it on the chart, and we're going to click it, and we go into inputs. Don't mess with your NATR period. Of course, you can adjust this to 14 if you want. This is going to be your look back period, so 14 is actually kind of standard. So mess around with that if you want. The default is okay, but if you do the default, you're going to get different results from this. But as you can see, with a 14 look back window, you're getting a much wider average true range. So if you only look back at the last 5 candles, you're going to get a much tighter stop. So if you set the NATR multiple to 1, you're going to get 1 ATR. You're going to get 1 ATR. Okay. So then you can pull open your data window, and you can see average true range trailing stops by Sylvain Ververt. Where is it sitting at? It's sitting at 30,000 Satoshis. So you can take the price that you want to measure your box from, which in this case is the swing low. We're going to measure up. So from the box, we're going to measure up 1 ATR. We're going to measure down 2 ATR. So we just take this and times it by 2. We measure down. That establishes our buy box. And then we take the price and we measure down 3 to 3.5x ATR. And that establishes our stop loss. Adjust your position size accordingly and ladder your buy appropriately. Now, are you going to get filled? Can this get you punched in the face? Yes, it can. It can get you punched in the face. But it's a bottom scraping strategy to catch low liquidity wicks because where our stop loss is going to be placed and what do you normally see before a nice bullish movement with something in accumulation, you often see a stop loss on. So I see a little bit of a selling climax, automatic rally. We haven't had the spring, which is what we're looking for. So the spring and Wyckoff accumulation method is the same thing as what most people traditionally refer to as a stop loss on. And that's going to be a fairly violent plunge down into this area. So you've got your stop loss far enough away. Now, if price just starts closing dailies down below, I mean, you can set your stop up higher and wait for another sign to re-enter. The reason this stop is set so wide is really to protect you from these candles like this. What if price spikes down big on high volatility, clears out all the shorts, fills up all the limit orders here, and then goes to 40,000 Satoshis. That's why the stop is set so wide. But again, you can adjust the time frame, because if you adjust your time frame, you're going to get a different ATR because the volatility of the candles is going to be different. So if you want to go down to the 4-hour chart, I normally do this on the 4-hour chart, and I would get something that looks, I would get a buy box that is a quarter of this size, most likely. So something to think about, and your stop loss would most likely be around here. So in this case, we did this on the 4-hour chart. We'd likely be buying like a range like this on the 4-hour chart if we did that, and our stop loss would probably be like right here. So something to consider. Good strategy, guys. Give you guys that one for free. How does this work with shorting? The exact same thing, man. Establish a local top. Prices like hanging out in that range. Establish that local top. Go up 2 ATR. Go down 1 ATR. Measure that range. And then set your stop loss 3.5 or 3x ATR. Yeah, I'm on Twitch Insurance Casino. At Kraken Crypto. Hey, thanks, JMG. If you're right about that, then I'm going to feel dumb because I literally had somebody build me that because I couldn't figure out how to do it on the regular ATR. The moment you've all been waiting for, Justin being stupid live on the air. Yeah, see, I don't see where you can adjust precision, man. This isn't precision. This is the length of the look back window. Oh, there we go. Scott was already on it. Might add on BNB BTC here. Might not be a bad idea. So yeah, that's why I had shout out to the guy who wrote that script for me. You know who you are, sir. But I'll protect your anonymity. Because otherwise people ask you to do too many stuffs. Ooh, it's 4 o'clock. Means I gotta go, guys. And Ada. I saw Ada up there, man. So let's look at Mr. Ada real quick.
It's over 9,000!
So that was the last trade. What do we think? It's been a couple days since I've looked at Cardano. Let's just go to the daily. Got too much shit going on here. I don't really have a firm opinion on ADA at this point in time, to be honest with you. I mean, this is like my 50-50 range. You know, here's previous resistance. We bounced off of it, but you know, and we approached that. We approached support. See, we had that nice oversold volume, right? We have a nice little volume spike that's above the moving average. That's important to me. Volume has to be above the moving average, okay? And price has to be oversold. That's a buy. That's a buy. Okay. And then our first area of resistance right here, I just targeted right here, took an average right here. Again, this is I draw in crayon, not in fine tip marker, guys. Otherwise, if you draw in fine tip marker, your levels are never going to get hit. And when they do, you feel like a god, and when they never do, you just find a different job. Not getting a lot of follow through, man. So I'm gonna wait. If we get back above this level, I probably won't be putting on a long, man. I took the scalp, but I probably won't be putting on a long, man, until
It's over 9,000.
Well, thanks so much for the subs, guys. I probably won't be putting back along until we can get back above this resistance zone right here. And then I'll wait for price to consolidate. And again, it depends on the nature in which we approach. If we just like violently spike up here, then I'll put on a short back at the resistance zone, man. But we got this huge HVN coming in above us, and I don't long into resistance because we've got pretty smooth skies over us, man. I'll take this trade from here to here. That's going to be a juicy one. Yeah, it's going to be a 20%er, man. I'll take that trade right there.
Honey Badger don't care. Honey Badger don't
But if
give
we
a shit. It
spike
just
up real
takes what it
volatilely,
wants.
then I'm going to put on the short again from the resistance zone, man. That's worked out twice already. So, and if we close the daily below here, I'll probably short the breakdown. I'll probably short the breakdown because I don't see us stopping until 1020. I'd be a little bit more precise when we get down there, but this could all be, I mean, I could be wrong. I mean, I have an overall like kind of bearish sentiment, obviously, about this right now, but you know, the daily's a little oversold, given the cross up, but you know, look, if we look at the Fisher right here, looks like the tips are threatening to touch. You know, we get that little curl down. And when I see that, I'm a little cautious, man, about the bullish movement. Full bullish retracement of the bullish movement right there. I mean, you can try and take the oversold plunge if you want. The volume really isn't there for me, man, though. You know, the volume isn't there. So if we do close above 1164,
It's over 9,000!
there's nothing that can convince me to take a long. I'm not going to long into resistance. It doesn't happen. That's not how I trade. So yeah, we do actually have to firmly like consolidate at a higher level. If we consolidate up here again after 2 touches, if we can get back up here and consolidate, I'll probably put on a long. I'll probably put on a long and set my stop below the HVN. And I'll look to take profit at the resistance zone. And then I'm going to double initial profit. And then I'll double up if we close above is what I'll do. And then I'll target this zone right here. And then I'll move my stop up. I'll short the breakdown. I'll short the breakdown since we're in a bearish cycle right here. And I'll short resistance if we like come up kind of slow and then just pop up in this zone right here. I'm going to short. So
Honey Badger don't care. Honey Badger don't give a shit. It just takes what it wants.
thanks so much, guys. Let me give a shout out, man. We got local New Jersey business videos. Uday Krishna, Karen Prussi, Metal Meltdown, 1995, Michael Odiba, Insurance Casino, Ravi Yadav, Cynthia Baca, and Cruz CIT. Thank you so much, guys, for the subs on YouTube, guys. We're here every day, normally from noon to 2 Central Standard Time. Had to do a little bit of a later show today, guys. And I do want to give a big thank out, man, to Poggerbot 187 and New York City Dust Bunnies. Thanks so much for the follows on Twitch, guys. Highly appreciate it. I thank you so much, man. All right, guys, that's all for me. If you, hopefully you guys have enjoyed the technical analysis. Hopefully you guys have enjoyed the reviews, the news, all the good stuff, guys. We're here every day from 12 to 2 p.m. Central Standard Time. On the weekends from 5 to 7 p.m. Central Standard Time. So always a good time to catch us, man. Okay, so let me think here real quick. If there's anything I want to talk about. So a couple announcements. Tomorrow at noon, we will be launching the 2-week giveaway. So we're going to be giving away 3 spots. We're going to be giving away 3 spots to the Kraken Cryptocurrency Trading Group. They're so free 1-month trial to 3 lucky people. You'll get access to the trade setups from all our analysts and traders. You'll get access to our resource database library, our educational webinars to teach you to be a profitable trader from scratch. You'll get access to the live trade tracking sheet on Google Drive. You'll also get access to the hidden Discord community, the the members lounge chat room, and the VIP day trading voice chat channel, as well as all the resources and links in there as well, and technical analysis from the analysts and traders of Kraken Cryptocurrency, as well as access to my scripts. So that starts tomorrow at noon. It's going to be through Gleam, so you can log in to the competition with any social media account you have: YouTube, Twitch, Discord, Instagram, Twitter, Facebook, whatever. You can log in using any of those accounts. Then, if you follow us on Twitter, you get a point. If you join our Discord, you get a point. If you, all that good stuff, man. Hopefully you guys can hear that music. I'm not just dancing randomly. Yeah. Sing it to me. Good one. Hey, thanks so much for the sub on YouTube, or for the sub on Twitch, my good friend. Thank you so much, Radioactive 328. You're one of the good ones, brother. All right, so doing the giveaway tomorrow. And what a guy, dude. That's what I'm talking about. Somebody who subscribes before they even followed the channel, man. Value for value, my good friend. I see you. So we're doing the giveaway tomorrow, starting the 2nd week of February. We're going to be doing the Masternode giveaway. So we do have a partner coin, a proud partner of the show. I'm not going to tell you who it is yet because I want the tension to build. But they've been gracious enough to we're going to give away 5 Masternodes worth of their project. So if you guys are interested in that, we'll be doing that same giveaway at that point in time. We'll also be having them on the show to discuss. We've already done that before, but so there's only 4 possibilities. There's only 4 crypto community development coins that we do talk about because they're part of the community and they're good people, man. But we don't really bring on altcoin projects and show what they do or tell you to buy them. We don't do that. We don't make money off of all that random crazy crap, dude. I'm honest, transparent. I do what I do. But there are people in the space that I like who have been part of the community and been around in the Discord space for a while that are good people. And when they try to do a project that actually is interesting, I support that. And I tell people about it. So we'll be doing that. Let's get to the end of the show, guys. Let me make sure I switch over. Thanks for the subs on YouTube, BT Dubs, Evo Soars, and Young Comedy Gamer. Yeah, this one right here. Sorry, let me switch my screen over, guys. All right, if this is your first time to the show, make sure that you hit that subscribe button and the notification bell because we're here every single day. If you hit the thumbs up, we appreciate that too. If you don't, it's okay, give the thumbs down, but I'd appreciate it if you leave a comment explaining what you did or didn't like about the video. I'm just trying to improve my craft and, just trying to start a conversation, guys. If you'd like to support the show, head on over to twitch.tv/crackingcrypto. Give us a follow and a subscription, helps keep the lights on. You can also pick up a t-shirt or mug from our merch store at crackingcryptocurrency.com/merch or support us on Patreon as well at crackingcrypto or patreon.com/crackingcrypto. Let's get into the cool stuff, though. If you guys, if 2018 was a rough year for you, if you want to learn how to identify key points in the market, if you want to learn how to identify what oversold volume positions are, how to develop a profitable trading strategy, how to exploit retail psychology, and overall how to improve your risk management and trading strategy, consider joining the Cracking Cryptocurrency Premium Trading Group. As I said earlier, you get access to all our setups and signals, our hidden Discord, our database library. You get access to our webinar series. You get one-on-one mentorship and support. We add a lot of stuff, man. Your own customizable tracking trade journal. Scott just added that. That's whack-a-noodle crazy. Automatically updates through all the API exchanges, as well as our live trade tracker, which does the same thing. It is a live tracking sheet of all our trades. All right, guys. All that information's at premium.crackingcryptocurrency.com. Links in the description down below, guys. We appreciate the support. Thank you so much for spending your afternoon with me. Of course, I'm Justin Wise, lead analyst and senior mentor at crackingcryptocurrency.com. I hope today's show has helped crack cryptocurrency for you. You guys have been awesome. Leave any thoughts, comments, questions, opinions, sarcastic remarks, and/or death threats in the comment section down below. I'll see you tomorrow, and as always, trade safely.